What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be covering a ton of great information, so make sure you pay attention all the way till the very end, because we are going to look at Visa's valuation, we are going to look at their earnings and where it could be headed in the future. We are also going to take a look at consumer confidence in the US and how that could affect Visa and where it could be headed in the future. We are also going to look at stock-based compensation, and then finally, we will look at shares outstanding for Visa. So there is going to be a lot of great information in this video that is going to be covered. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at Visa's stock chart. We can see here today, the stock was down over 0.25%. If we look over the last 5 days, however, it is up around 4.5%. If we look at the last month, up over 6%, 6 months, up over 9%. And over the last year, this company has moved up almost 18%, which is an outstanding move over the last year. If we look at 5 years, it gets even more impressive, almost 72%. And max chart, which goes only back to 2008, we can see that this stock is up over 1,300%. So Visa over the last couple of decades has been a great compounding machine. In terms of valuation, Visa is currently sitting at a forward P ratio of a 23.58, which is actually fairly low when we compare that to the S&P 500, which is currently sitting at a 25.54. However, keep in mind that these valuation metrics can really change depending on what your estimates are for EPS. So if we look at the current year for 2023, we can see that the average EPS estimate for analysts is $8.60. We have a low estimate of $8.13 and a high estimate of $8.81. Based on those EPS numbers, which we have written over here, so 860 for average, 813 for low, and 881 for high, and the current price of $238.88, we get the following PE ratios. So a 27.78 for the average estimate, a 29.38 for the low estimate, and then a 27.11 for the high estimate of EPS. So obviously those numbers are a little bit higher than what we saw under the statistics page for Yahoo Finance, but what we can do is we can also run the numbers for 2024. So analysts right now currently have an average EPS estimate for 2024 of $9.78, a low estimate of $8.69, and a high estimate of $10.13. So for the 2024 EPS estimates, we can see what the corresponding forward P ratio is. So for the average estimate, we get a forward PE of 24.43. For the low estimate, we get a PE ratio of 27.49. And for the high estimate, we get a PE ratio of 23.58. So based on those calculations, we can see that Yahoo Finance's statistics page is currently showing the forward PE ratio based off the best EPS estimate in 2024. So the real question is how realistic is this growth? So if we look at these estimates and compare the two numbers year over year, we see that for the average EPS estimate, analysts are projecting about 13.7% growth. For the low estimate, they are projecting 6.9% growth. And for the high estimate, they are projecting 14.9% growth. And Visa over the last couple of years has actually been able to achieve fairly high growth rates. We can see that in 2022, their numbers grew 24.21% year over year from 2021. And from 2021 compared to 2020, they actually grew 15%. However, if we go to 2020, which obviously was a very down year, and compare that to 2019, they saw an 8.3% decline in their EPS. In my opinion, we could see Visa continue to grow their earnings due to a couple of reasons. And one of those is the Consumer Confidence Index. When we look at the Consumer Confidence Index over 2022, we saw it drop in a massive way. However, in 2023, we're starting to see it turn around and consumers to really gain more confidence in the economy and where it could be headed. And overall, that has a big impact for Visa because that means that people are more willing to go out and spend money with their Visa credit cards. And we see a similar trend when we look at the graph for families' current financial situation. So what we are looking at here in blue is the line representing the number or the percentage of families that say they are in a good financial situation. And then the red line is the percentage of families that say they are in a bad financial situation. A year ago, we could see that the percentage of families that said they were in a bad financial situation was actually higher than the percentage of families that said they were in a good financial situation. And what we have seen over the last year is the percentage of families that feel like they are in a good financial situation has continued to increase and leveled off over the last couple of months. However, what's more more important is the percentage of families that feel like they are in a bad financial situation has decreased in a major way, especially if we look back around 8 months ago. We started to see it drop very significantly and continue throughout this year. And we see again a similar trend when we look at the perceived likelihood of a US recession over the next 12 months. It has dropped from 73.2% in May down to 69.3% in June. So what these charts actually mean for Visa is ultimately that consumers are going to be more willing to go out and spend money. If we were seeing worries about a recession, then what consumers oftentimes will do is they will be worried that they could potentially be losing their jobs and they won't spend money. But now that we're seeing a lot of these concerns start to pull back, we could start seeing spending go up as well. And that ultimately is going to have a positive impact on Visa's EPS. Visa is scheduled to report their next earnings on July 25th, and analysts are expecting EPS to come in at $2.11 and revenue to come in at $8.06 billion. So the last couple things I wanted to look at are stock-based compensation. So here we can see that in 2022, they had $0.602 billion in stock-based compensation, and we have seen it gradually increase over the last couple of years. In my opinion, I don't love to see this. I don't love seeing companies increase their stock-based compensation because ultimately what it does is it dilutes the shareholders. However, Visa does do a good job of buying back their shares. We could see that ever since 2018, they've really had a steady trend of decreasing their share count by about 2%. And that overall has helped to decline the number of shares outstanding that they have. In 2018, they were sitting around 2.6 billion shares outstanding. And we could see that now here they're sitting around 2.3 billion shares outstanding. So personally, I do own Visa. I like this company for the long term. This is one of the stocks that I really don't plan on ever selling. I think they're consistently going to grow. They have a great moat. That is one thing we did not get into this video, but at the end of the day, Visa has around a 50% market share of the credit card industry. And that is absolutely massive so that they can continue to grow and really have pricing power over the industry. So keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.